Hey everyone, welcome back to Upside Down Data. So the market has been rallying over the last 2 days, and in this video I'm going to take a look at a couple of our indicators, the trend confidence indicator and the market direction classifier. We'll also see some data about risk from our UDPI that provide some reason for optimism, and we'll help explain why I'm cautiously optimistic in this scenario. So if you guys like the content, subscribe to the channel, give the video a like, and let's dive into it. So we see these nice green candles here on the daily chart here for Bitcoin. And what's especially nice is that we see that they're supported by volume. Um, there was a pretty significant short squeeze. It was actually the most significant short squeeze in over a year for Bitcoin, over 500 million in liquidations. So a pretty substantial move. And it's also lining up with some other things that we like to see. The DXY is rolling over here after putting in a lower high, putting in these two very red candles over the last couple days. That's nice to see. We also see the stock market has been rallying a little bit, although not quite to the same extent that Bitcoin has. The stock market actually opened down this morning before rallying a little bit. And the major catalyst for this move up was announcements about third quarter earnings, which by and large were optimistic, came in, exceeded expectations, not across the board, but across enough of the market that this increased investors' appetite for risk assets, and so people started buying in, increasing their exposure, and that caught some people off sides. People who are still in this bear market mentality got caught off sides. So there's a lesson in there, which is bear markets don't last forever. This bear market too will end. You're in a bear market when it feels like it will never end, and when everyone is talking about the death of crypto. But crypto is not dead. It's here. It's here to stay. And there's reason for cautious optimism, like I said. Now, this level that we're at right now, about 2,700 on the Bitcoin chart, is significant. And it's significant because it's battling right now with a couple of critical levels. So let's take a look at a couple of charts here. This is the trend confidence indicator, which tells us whether we have a basis for expecting the current trend to continue. When we see this green, um, then there's a basis for expecting the move up to continue, especially as the trend confidence indicator continues to push higher. And the opposite obviously is true when we're seeing red. This green and red oscillator here, this is the trend confidence indicator. The yellow is the price. So over the last 2 days, Bitcoin has regained the midpoint on the trend confidence indicator and is pushing up a little bit. And as it continues to do that, this gives us increased confidence from a technical standpoint that the move is gaining in strength. So that's encouraging. Another thing that's encouraging is to take a look at the market direction classifier, which is a different indicator which is used to complement the trend confidence indicator and is really focused on direction. Trend confidence is focused on the strength of the trend and trying to identify when the trend is losing steam versus gaining steam. And right now it's clearly gaining steam. The market direction classifier is really trying to tell us in a more binary way whether up or down is the more likely move. And these are daily closes that determine whether the market direction classifier is red or green. And this yellow line is the critical level. The color coding is overlaid on the price chart. So when we see green here, it means that the price has moved above the critical level on the market direction classifier, and the opposite is true, obviously, when it's red. And as I said, these are based on daily closes. So what we can see here is that uh, directionally, let me zoom in here so you can see a little bit more clearly. The price of Bitcoin has overtaken the critical level on the market direction classifier, which is at 20,757 right now. It's kind of bouncing, right around that level. It was above it. It spends a couple minutes below it. It's battling for this critical level. If it closes the daily above the market direction classifier critical level at 2757, we will see this flip green. So this is why I say that this is a critical level, because these are both technical indicators, meaning they're analyzing price action and telling us what to expect based on that. So we have a trend that's strengthening to the upside, as we just saw, and we have a battle that's ongoing for the critical level in terms of the market direction. It would be really encouraging to see a daily close above 2757 because that would confirm what we're seeing on the trend side. We see green on the trend side, and now we want to see that confirmed in terms of direction. Um, so, if we go back to the price chart here again, as we can see, let's zoom in a little bit to a higher resolution. So here's the 4-hour chart. It's been a lot of green over the last 24 hours or so. And the volume has continued to come in. It got that major spike after the earnings were announced yesterday. But we've seen some continued interest and buyers stepping in. And now it looks like, things are chilling out for the moment and hanging around right in that 20,750-ish level, right around that critical level on the MDC. So watch this daily close, folks. It's going to be important. If we see a daily close above this level, that will provide further indication that this move could be ready to continue, or that at least we'll find support around this level and potentially create a new normal here. Now, we can also look at the market as a whole. What I have up here is our dashboard from our forthcoming website, which has information about the TCI, the Trend Confidence Indicator. As This is the TCI number, and this is the critical level. And over here on the right is the MDC critical level on the far right. So as you can see, this is that number that I was referring to. We also have some other indicators up here. I'm not going to go into those in depth, but you can see the UDPI, the upside downside potential indicator, which is our risk indicator across time frames. And we like to see these green negative values because that indicates that there's more upside potential than downside potential. So the real sweet spot when you're looking across these indicators is when you see that risk is relatively low, meaning that there's plenty of upside potential to be had, but also that the critical levels are starting to be retaken, because that suggests that the market is turning uh, tentatively bullish, um, at a time when there's still plenty of room to run to the upside. So we're not going to jump to any conclusions here. We could lose this level and resume our downtrend. We are in a bear market. There's no question about that. But as I said, bear markets don't last forever. And one of the things that we want to look for as we're positioning ourselves is low risk combined with optimistic readings on the trend confidence and the market direction. We can see similar things across many of these other assets. Ethereum put in an even more impressive move than Bitcoin did over the past day or so. Um, and that's somewhat reflected in this short-term UDPI, which has moved a bit back toward the midpoint. Still below the midpoint, nothing to be worried about. But from a short-term perspective, not quite as attractive as we see for Bitcoin. Although from a long-term perspective, Ethereum is still looking like quite a nice buy at these levels. The trend is quite strong. This plus zero point 0.9 here indicates that the trend on Ethereum has become rather bullish recently. It's well above the critical level on the trend confidence indicator. So the TCI is not losing confidence in this move on Ethereum. It's also above the Market Direction Classifier critical level. It overtook that, and it's also hanging out quite a bit above that level now. So while Bitcoin is battling for its MDC critical level, Ethereum has a little bit more leeway, and that's again because it put in an even stronger move than did Bitcoin. We see much the same for many assets, although not for every asset. So for Solana, for example, we see that the risk is quite low across time frames. Solana has been, has taken a real punishing over the course of this bear market, and from a long-term perspective, it's quite an attractive um, asset to be accumulating if you believe in its fundamentals. And as we've discussed in previous videos, I think there's good reason to be optimistic about Solana's staying power from a fundamental standpoint. So, these low risk levels, given that, are quite attractive. It has not overtaken its MDC though; it's still quite a bit below that, and so if we're just looking at Solana from a technical perspective, it still has some work to do to get back above that level. That's true of a number of others, DOT and AVAX, which also, if you look at the UDPI, are really from a historical standpoint quite appealing to accumulate at this point. Another thing that's interesting to note here, I think, is that if we look at quant, we made a video about quant uh, just last week, and quant put in a really impressive move over a period of couple of months, really, when the market as a whole was very bearish. And we can see that it's an outlier in terms of risk as a result. It exhausted some of its upside potential. And it's no surprise then to see that quant has not really participated in this rally over the last couple of days, at least not nearly to the extent that most of the rest of the market has. And um, that's a predictable outcome. This is why we try to hammer home, um, looking for outliers across the market. When you see that most of the market is in the green here with these low risk levels, but there's one that's run and exhausted a lot of its upside potential. That's really not where you'd want to be most heavily positioned at the time, because even if the market as a whole rallies, the higher risk assets are more likely to get left behind. And on the flip side, if the market is going to turn over and move back down toward the downside, if the market is going to start losing these directional critical levels, then the higher risk assets are the likely ones to get punished the hardest. So, keep that in mind. We'll, of course, keep pointing these things out to you guys as they emerge. Right now, quant is an outlier in the wrong direction. There are many others that are safer bets, especially from a risk standpoint, but even from a trend and a directional standpoint. So, we try to maximize across these indicators as much as possible. From a long-term accumulation standpoint, buying at low risk levels is the name of the game. Um, when we're also trying to figure out which are going to be the market leaders, and which have the most potential to turn things around and potentially start digging out of this bear market. Um, we also really need to see action on trend and direction. And that is what we're seeing. So this is a reason for cautious optimism. Cautious for sure, because inflation remains high. The macroeconomic conditions uh, are still really difficult to contend with. The Fed um, is planning to continue raising rates, and it's entirely possible that this bullish move is going to be short-lived on the back of these earnings from the third quarter of 2022. But at the same time, the price of Bitcoin and many of these other assets have been consolidating at lower levels for quite a while. Let's zoom back out here to the daily chart. There's been so little volatility recently. Over the past couple of weeks, we really didn't move on the Bitcoin price chart past 18.3 down here and 23. I mean, over the past couple of weeks, even lower than that. We had this one wick down there, about 10 days ago or so. But for the most part, things have really, really been coiling up, and so volatility was coming, and the volatility broke out to the upside. So let's keep watching this. I think that what's really come into play here is the trend and directional indicators. When there's not much happening, really the main thing to be watching is risk levels, accumulating, and being patient. Um, but we've now seen that these critical levels have been overtaken, and that creates some potential for a continuation to the upside. That's what the trend confidence tells us. The move is picking up steam. We're watching this right now as the price of Bitcoin kind of bounces around this critical level on the directional chart. And so let's watch for that close. We'll keep you posted. I hope you guys found this useful. Thanks for watching.